Welcome to part 2. Today, as I said, is July 16, 2023. In part 2, we'll be discussing about dollar index and its components. Of course, we will also discuss USD and INR, though it is not part of dollar index components. So, what are the components we will discuss? Dollar index, then Euro versus USD, GBP versus USD, and USD versus JPY, and USD versus INR. Though it is not part of dollar index, we'll be discussing. We said that. I have told many times. Once again, I tell dollar index and euro versus USD and GBP USD will go in the opposite direction, inverse relationship between them, because it is dollar index. Dollar index is euro versus USD, GBP USD. That's the reason, right? First, let's look at the rates and the levels. Rates: dollar index closed at 99.6095, and euro versus USD closed at 1.2270, and US GBP versus USD 1.3086, USD versus JPY 138.73, and USD versus INR 82.049. So, of course, dollar index fell 2.6%, while euro versus USD, euro jumped up 20%. Yes, you heard right. It jumped up 20%. That's why such a massive move that dollar index has seen such a fall, because euro moved very strongly. Euro moved very strongly. Of course, GBP moved up by 3%. So now let's go into the levels. So in the weekly chart, always know we will see this in sync. Dollar index formed a solid big red candle and closed below the Bollinger lower band. So I said that the inverse relationship, euro versus USD and GBP versus USD, it formed a solid green candle and closed above the Bollinger upper band. So that's the inverse relationship. So now from now on we will discuss dollar index, then we'll go into GBP and euro USDs together. So dollar index, in the process, it fell below significantly. Now the only support that is available in the weekly chart is the 200 week moving average. What is 200 week? 4 years average. So that is at somewhere around 98 levels. In fact, if you recollect, I have told many times in my video that the 200 week and the 50-month moving average will act as a very strong support. In the monthly chart, it formed a solid red candle again, but it is well above the monthly chart 50-month moving average, which is at 97. That means the 98 to 97 will act as a very, very strong support. It cannot be broken down that easily. If it breaks, then you have a significant fall, but that will not happen. I'll tell you why. In the daily chart, of course, it formed the first reversal on Friday, where it formed a solid green candle, forming a reversal candle, but that's just the first reversal. Normally, it has to be ignored. So now when we analyze together euro versus USD and GBP versus USD, as I said, in the weekly chart, it formed a solid green candle, closed above the Bollinger upper band. So dollar index closed below the Bollinger lower band. This closed above the upper band. That is euro versus USD and GBP versus USD. In the process, it is above all the moving averages in the weekly chart. Both dollar in euro and GBP versus USD in the chart, it is above the all the moving average. That is, when I say all the moving average, 50 week, 100 week and 200 week moving average. In the case of monthly chart, both these are below the above the 50 month, but below the 200, 100 and 200 month moving average. It formed a solid green candle till now, but of course it has taken the 50 month moving average, but still below the 100 and 200 month moving average, which is at a further higher levels. Anyway, we will see that levels as we approach that. So then that means whether it is able to take first the 100 month moving average, which is nearby, we have to wait and see. I don't think it can be taken out that easily. If that is taken out, then dollar will lose further weakness, but dollar is strong against GBP. We will come to that. So in the daily chart, it formed a doji. Both formed a doji. Of course, GBP formed a solid red candle, but still it is a first reversal. It has to be ignored always. Okay. So in the case of, let's say, GBP versus USD versus GBP, in the weekly, it formed a solid red candle. Once again, it took support at where? It took support at the 50-week moving average at 130 137.52. It touched there and then bounced. In the monthly chart, it formed a solid red candle because we said last month itself it formed 3 green candles, and there is a probability and possibility of forming a falling 3 method. That's what we said. That is what had happened, which is why dollar index has fallen significantly, because dollar index was very strong against JPY, but that weakness allowed dollar index to break certain key levels. In the daily chart, what happened? Though it is below the 50-day moving average, JPY, USD JPY, but it is about touching the 100 and 200-day moving average. That will act as a very strong support. That has to be broken if really dollar index has to break the key levels, which is why I said that it's not going to happen that easily. Next is our interest, USD INR. So USD INR solid red candle in the weekly. It formed a bearish engulf. In the monthly chart till now, it has formed a spinning top. But as I said, it is forming a rounding top, and the shootout on the upward direction is a probability then going down. In the daily chart, yes, it is below all the moving averages, but we have to wait and see how the things progress. But next month we will have dollar index going up, because it is going to form a sideways from now on, or probably from this week, that is the next week onwards, thereby forming a base at these levels, which will propel it to go up, because those key levels cannot be broken down. So in part 3, you can see US 10-year treasury yield and also Brent and NYMEX. Thank you very much.